Hey everybody, I just wanted to welcome Ari Page to the call. Ari is the CEO of Fund and Grow. We're lucky enough to have some time out of his day to, go over some things that they do over at Fund and Grow, and they've really helped our clients. We think we've sent over so far 27 clients, helped them bring in about over $3 million in 0% interest credit cards over the last couple of years. So we're excited to talk to Ari and just wanted to ask some questions and get to know him and give you guys some information about what Fund and Grow does. So thanks for being on, Ari. Appreciate it.
Thank you guys for having me.
Yeah, absolutely. So can you give us a bit of a background about who you are and how you got into the industry with credit and stuff?
Absolutely. So my background is not in finance. My background, I was a blue collar worker. I was working in the shipyards in Virginia. We were contracting to Navy bases in terms of working on their ships. And then I learned about this thing called the law of attraction, which absolutely changed the trajectory of my life. And I was constantly receiving phone calls from this guy that I knew. His name was Dave Candle, and he was a loan officer, and he was closing all kinds of loans for clients in just particular zip codes in California, like in Laguna Niguel and Hollywood and just certain high-end areas. And so he was always trying to get me to come and work for him, and I would just always ignore him because I just, I thought I knew better. But then after I learned about this concept of law of attraction, and I really wanted to get out of the shipyards and out of this blue collar work, I took a bit more attention. I paid a bit more attention to what Dave was asking me to do. So I started working with Dave, and at the time he was doing mortgage loans, and this was right before the crash of 2008. And so when everything crashed in 2008, we retooled the mortgage company. At the time, it was called Loan Pro Financial. And we then became what was called credit card builders. And credit card builders was just us charging people to get them this funding. In the beginning, we were charging $1,500 an hour. And so the average client would pay us $10,000, $15,000, walk away with hundreds of thousands of this type of funding. But then we put it all together into a packaged membership. We renamed our company to Fund and Grow, because that is the main topic of what we want. Is we want to help small businesses grow. Funding is a part of that, but growing is the more important part. Not just growing personally and growing our families and growing our towns, but also growing our businesses and becoming self-sufficient, in terms of not always being dependent on big corporations. So with all of this, Fund and Grow was born out of what was first a loan, a mortgage company, that then we were just doing hourly work for clients. And then we realized the real gold that we had here was that we could still get funding. We could get funding. Everything else crashed. We were still getting funding. To this day, we're still getting funding. We're generating over 25 million in this type of funding every single month. Every month, we're generating over $25 million of these types of loans. Some months more, some months a little bit less. But the long and short is this type of funding has been preferred by the banks in order to minimize their risk. So the banks are using less risky loans. And in this case, it actually happens to be these business credit cards. So instead of them giving out a $250,000 loan to somebody, they're giving out microloans. It might be a $45,000 loan, a $50,000, a $70,000. So these micro loans are more along the model and the lines of the way that the banks want to lend out, and Fund and Grow is set up to leverage these offers for clients that are trying to get into business or that already have a small business. And Fund and Grow is a white glove service that does all of the work for the client and gets them the funding, and all they have to do is grow their business.
Yeah, that's awesome. Awesome. When it comes to the funding, what challenges do you notice entrepreneurs are running into?
So a lot of clients come to us and they have everything that they need. They have the revenues that they need, they have the credit scores that they need, they have their operational business, and they're good at their niche. But the problem is they just can't seem to get access to funding to grow. and they've applied here, they've applied there, but they really don't know what the right products are, what the safest products are. And so where Fund and Grow comes in is we're helping people that are already well qualified be able to get access to the funding that they deserve. That most of the time when they go on their own to apply, they get declined, even though they have all of the right stats. They have everything that they need, but perhaps it's not showing up the right way on the report or on their profile. And there's a variety of different things that are going to hold clients back. And in today's world, a lot of people have had their credit dinged. And with these business credit cards, they do want to look at your personal credit before they approve the card. Even though they don't report to your personal credit, they want to look at your personal credit. And so in today's world, a lot of people have had their credit dinged with problems from the past, ups and downs of the economy. And the good thing is that just know that there is hope that anybody can move forward and clean up their credit. I personally had bad credit when I got into all of this. I cleaned up my credit, and I just went through a batch of funding through Fund and Grow. And so far I'm at 115,000 just from this one batch of funding. And that puts me up to like well over 600,000 in this type of funding. But just that one batch alone is at 115. I'm going to be making a video on that and posting it on our channel pretty soon.
You mentioned about like the PG, when the people have to guarantee like that, but so they are getting
Inquiry.
Inquiry on their credit report, right? But then it doesn't always show up it doesn't always show on their personal credit report, even though they did that inquiry. Is that true? Like, so some of this business credit, because we had a client we were talking to the other day, and he said it doesn't show up on his business credit. So that's something that I guess would like to understand. Like, if they are getting an inquiry, do some show up and some don't show up on your personal credit?
Well, it all depends on exactly what they were applying for. So there is personal credit inquiries, then there's business credit inquiries. So there is a business credit union or a business report for the different credit bureaus, such as TransUnion, such as Experian and Equifax. So they all have a business side. However, the business credit cards that we're applying for, they are personally guaranteed business cards. So they're actually running your personal credit report, not your business credit report. Because these are personally guaranteed business credit cards. Now, once they've approved you for the card, now they're going to report it to the EIN of the business. So in that case, then it gets reported to the business reports. But when they're approving it, they're actually applying with you personally to look at your personal report. Because in most cases, people don't have enough history to be able to get approved for something like that. And so they're looking at their personal credit report. Imagine when you graduated from high school and you didn't have any credit. You didn't have any credit at all. And that's the way it is when people are starting business credit. So in order for a bank to get a better read on the person, they can say, okay, you just got started in your business maybe a year, 2, 3 years ago, but your personal credit history goes all the way back. That gives me a good, strong standing, to understand this individual. So that's why they want to look at your personal credit. But then once they've granted that card, if a business credit card looks at your personal credit report and then grants the card, you can dispute and remove that inquiry that is on your personal credit report. Because now it's a business approval, not a personal inquiry.
Oh, okay.
It was approved, but now being reported to your EIN number, that is not a personal inquiry. The bank has just they've finagled a way to get more info on you, and you agreed to it by allowing them to look at your personal credit to give them a better understanding of who you are. So if it's that inquiry, if it's the inquiry from, let's say, for example, American Express business, or Chase business, or Bank of America business, or Wells Fargo business, or US Bank business, or Elon business, or all. Yep. If it's any of those, they're looking at your personal credit report. And they're going to start by running one bureau. Then in some cases, they'll do a second follow-up. And we track all this. We know which bureaus they're pulling so that, if someone does have a problem on one bureau, we can get the bank to pull the other bureau. But the long and short is, if we're talking about the business credit cards that we apply for, which is just your standard business credit card that all the big banks offer, then they're running personal credit. But once that's approved and becomes a business loan, The personal inquiry can be disputed and legally removed because it's no longer a personal inquiry. That's a business loan. Now, if you apply for like a Home Depot credit card and they approve you, and then you dispute the Home Depot inquiry, they're going to shut down your Home Depot card.
Right.
So you cannot do this on personal accounts that have converted into an approval. This is only for business accounts, and in that case, they can't hold it against you. So, so the business credit card will not be shut down when you dispute that inquiry.
You guys,
okay, that's great information, because that's what I was wondering, because that someone has told me that before, that if you get the credit card, you can't dispute that transaction. But now that you mentioned, since it's on the business credit, that makes a lot of sense, that it's now reporting to the EIN and not your social. So that makes a ton of sense. Thanks for that info. That's good.
Do you guys offer a service or a partner with anybody that helps remove those inquiries for you?
Yes. Yeah, we have a partner service called KDM Credit Help, and they do that. Furthermore, all of our clients, we teach them how to do that on their own so that they know how to remove these inquiries from now on.
Okay.
Yeah. That's awesome.
KDM also does like credit repair too. So somebody comes to you and their credit's not quite where, because like somebody comes to you, what do you want their credit to be at? Where do you want them to become like ready to go?
Yeah, if they have above a 700 score, then we're going to be able to move forward advantageously. If they have below a 700 score, we have to find out why. Sometimes it can be just because of heavy balances, which means that we can use one of our other types of loans to pay down the heavy balance. Then once their scores go up, then we can move forward and get them a batch of business funding. A lot of times business owners are using their personal credit for business expenses, and they end up with a lot of heavy personal expenses, bringing down their score. So in some cases, we have to help clients move past that in order to help them get qualified.
Was that sort of like a bridge, some sort of like a bridge loan or something like that?
Exactly.
You guys help them with that?
Exactly. It could be anywhere from an SBA to a private finance loan.
Okay. Now somebody comes to you and they're at that 700. What is the typical timeline from start to finish to get from calling you guys to actually having funding that they can use?
So if they are ready to go, and if their 700 score is not being in any way depressed by having, for example, they may have a 700, but they should have a 760, but they have a late payment. We would want to get whatever those items are removed first, and that's something that we would refer them to the credit repair company, to KDM Credit Help that I just mentioned. And so that credit repair company would get those items removed, and then we would move forward on whatever, on their application batch. Now, most of the time, it's not credit repair that's holding them down. Most of the time, it might be that they need a small bridge loan, or we just move forward on a batch of funding. So if they're ready to move forward, and so let's say that they start today, and we get their reports pulled. So within a day or two, they're ready to go to applications. If they're completely ready and there's nothing we can do, and most of the time there is something we can do to boost people's profile. Most of the time there's something that we can do. There's a whole variety of things. You can check out our webinar. In our webinar, we actually go over a credit report and break it down and show people what they can do to help increase their scores. And so if there's nothing that we can do, then in that case, we can move forward on the applications. Within 4 or 5 days, the decisions are already coming in. And I just went through this process. So when they applied, it was within 3 days, I had all the decisions. So then after that, now the accounts are being bumped up. Like I had an account that came in at 40, and then they negotiated it up to 45. And so now I'm waiting because they're going to do more negotiations. So
we had a woman a while back that her first round was like 44 or something like that. And then you guys negotiated up to 82 or something crazy like that. So how does that work? You guys just call for the client and say that they're such a cool person, they need more money than this or something, or how does that process work?
Well, our clients are cool. So
exactly.
We just call in and it's like, you know how cool these guys are?
Right.
But so that's one of the things that we mentioned. But then some of the other things that we mentioned are their business metrics, their stats, what the client has going on, their report. If there's any detractors, we'll preemptively bring that up to the underwriter. We know how to speak to the underwriter, and you'd be surprised at how many times the underwriter simply needs to verify who the person is. With all the new regulations surrounding terrorism and fraud. They really, a lot of times, many times, maybe 30-40% of the time, it's just getting the right documents. Easy stuff. And then there's a percentage of the time where our knowledge really comes in handy, where we know what to ask for, how to talk to the underwriter, because we know exactly what they're looking for. We know exactly what they're looking for. So we're presenting it in such a way where we're exemplifying all the client's positive attributes while minimizing their negative attributes so that we can get approved for as much as possible. And so for the client that got the 40, then it doubled, it went up to 80. So when they first applied, multiple cards might have come in at $5,000, $10,000, $15,000. And then our negotiators are calling the bank, they're explaining the client's business model, and they're saying, we need more. And so over that period of time, that could add an additional week on. So they might have got the first 40,000 within the first week, but then they continue the negotiations, and the negotiations could spill over into week number 2, sometimes even week number 3, because our team is calling the bank and speaking to the underwriters up to 7 times on each credit account. And this is really critical because all of the big banks have multiple call centers. And what we can't get in one, usually we can call others and get. You know, the ones that are in different, you know, this region are known for that, and the one that in that region is known for this. And so what we do is we work tirelessly to get the client as much funding as possible through that negotiations process.
That's awesome. What do you have? Do you guys have like an average, you know, a new customer comes in, is there any kind of like an average that you expect out of somebody, or is it kind of all over just depending on that client, like an average returns or credit amount they're going to get?
If a client has good credit, if they have a 700 score and they are not just starting out, they didn't just come out of high school, then it's a solid bet that they're going to get at least 50,000 in funding. And there's clients that have gotten, you know, easily 150,000 on one batch of funding. When we're applying for 5 cards, they could come in at anywhere from 20 to 40 to 50 to 70,000 a piece. We have clients that are getting $100,000 just on one card alone. That routinely is happening every week. More clients are getting a $60,000, a $70,000, a $80,000 card, and that's just one of the cards of an entire application batch, which usually includes 5 different cards. Then the cash off process starts, which is how to actually use the card beneficially within the client's business. You know, how can they access the money off the card and spend it on the inventory or on the deal, on whatever it is that the client's doing.
And you guys coach through that too. So I know people have used like Plastique is one of the services that you use, like to be able to wire from the credit card balance or something like that, right?
Yeah, and now BillPay.com and other really big players are stepping into that. So that's very exciting. Hopefully in the future, it's going to get even easier and easier to be able to get the cash off the card, working with the banking system, not pulling gimmicks and trying to use your own merchant account and then getting your merchant account shut down.
Yeah, and that's one of the things we kind of recognized or noticed is that when you get like a merchant account or when you try to wire a large amount of money, let's say 75K, what do you recommend, like working with Plastique or Bill Pay? Do you have to kind of slowly work up to that larger amount, or like do some smaller transactions first? Or when you use Plastique, do you see that they can use, you know, a 75K invoice right away and pay that right away with Plastique? Or do you think it takes some time to work up to that amount?
My understanding is that it's more about having all of the paperwork that they require filled out properly. Just all of the, they basically want to cut, like they're doing that transaction in such a way where you're doing it as an invoice. So it's basically like one company is invoicing another company. And so if you set up both sides of that transaction properly, you know, the purchaser with the credit card and then the seller and with the invoice and being set up properly and it's in the right industry, and it matches all of their guidelines, then my understanding is it's more about having all the paperwork put in properly, because these transactions are going to be, especially if it's over 10,000, it's going to be reviewed by, I believe, federally. And
Yeah.
so they just have to make sure that they have all of their paperwork done properly, which can, from my understanding, every time that I did it, there was a lot of paperwork to fill out. I never did 75,000 because I always did like 10,000 or 15 because I'm just checking it out. I'm not pulling it off to actually use the cash. I just would pay it back.
Yeah.
But just in order to use it. Now, I know that more recently, we've been having good success with billpay.com.
Okay.
So, and I think we would actually recommend that over plastic at this time.
Okay. That's good to know.
Going back to like the, when these guys are getting those 5 rounds of cards and you're talking, cards up to 100,000, are these all 0% all the time? Or is there a mixture in there of some that have rates on them already? Or is it all, you shoot for that 0% on all of them?
So all the cards that we apply for are 0%. Now, if we're doing a pay down loan to help a client, so those loans are different. But in terms of the credit cards, all the business credit cards are at 0%. It could be 0% for anywhere from 6, 9, 12, 22 months. We've seen all of that in terms of how long that 0% period is. Now, in some cases, clients will come to us and they may already have a business credit card, an old one that is at a ridiculous interest rate, like 16% or something. Or they might have personal credit cards with Bank of America, Chase, American Express, all the big boys, and it's at a really high rate, and they've never really thought about using it for their business. And so in those cases, what our team can do is we can actually, let's say that a client has a Bank of America business Visa card. We can apply for the Bank of America business MasterCard. And once we get approved for that card, we will merge the two accounts together. And so if you get approved for a new MasterCard, and let's say that you have the client has this old $20,000 card that has a high interest rate, so they don't use it. So then we apply for let's say it's a MasterCard. Now you already have a 20, so like, you know what? We're just gonna give you 5,000. So the lender gives $5,000 on the MasterCard. What we would do is on a separate phone call, we get the two merged together. The 5,000, the new account that has 0%, and the old $20,000 account. We merge them together into the new account.
Oh, wow.
Now we have a $25,000 account with 0%. And awesome. We only have the MasterCard. Now, 12 months from now, I can go and apply for the Visa again and do this whole card stacking process over.
What about like somebody I've got a couple cards that actually have they have the high rates, like 20% or whatever, but they also have balances on them. Is there a balance transfer ability in these types of cards too, where we can transfer some of that high balance debt onto these new cards?
It's hit or miss. Sometimes they'll allow the merging with a balance, and sometimes they won't, they won't want to touch a card that has a balance on it, and so you would have to do like a balance transfer first.
Yeah, but these cards, some of these cards have a balance, even if it's a different bank or whatever, that we could do the balance transfer off of that just to get rid of that, get it off of that high interest debt, potentially.
Absolutely.
Get it out. Yeah. Okay.
Yeah, that's something that's happening. That's happening all the time, especially if it's on a high interest personal card, because then it could be pushing you over the 35% ratio.
Yeah.
So on a personal credit card, you guys are aware of the 35% ratio?
Yeah.
We could tell viewers. Yeah, the utilization. So if, let's say for all the viewers, if you have a $10,000 card and I place more than $3,500, which is 35% of 10,000 on that card. So if I go above 3,500, I'm going over 35%. And now my credit score is going to come down. So on a personal credit card, I really can't use more than 35% of that credit card before it starts to severely hurt my personal credit scores. So you don't run into this with business cards. With business cards, you can max out the whole thing and it won't affect the personal credit.
Got it. Even when there's a personal guarantee on it, it still doesn't reflect?
No, the only way it would reflect negatively is or reflect at all, is if you stopped paying on the card altogether. Usually after 90 days, it's going to appear as a derogatory account on the personal credit report. Got it.
I did have kind of a side question. So I have great credit, 730 to 750 on some of them. But starting out in the business, I applied for all kinds of different credit cards, and I probably at one point I had like 19 inquiries, and I think it's down to like 14 or 15 now. But I haven't applied for a card for probably 6 months. When you guys do funding for people, do you go by the total inquiries? Does that have a negative effect? Or is it just you don't want to have inquiries on there over a certain amount of time before we start working with us?
So 14 inquiries from a little over 6 months ago is more
Well, I
than
think
likely.
it's like a 2 year, over like a 2 year period of time, there's 14.
Yeah, that sounds pretty heavy. What were the inquiries on? Were they on unsecured credit cards or was it on like other?
Yeah, I mean, it was a number of different things. Like I have, applied for a home loan on there. Some of them were business inquiries where I think, get like 3 or 4 different business cards. So those inquiries could probably be removed. And then most of the other ones are just personal credit cards that I applied for originally. And that was to begin to, start to get inventory for our e-commerce stores. But then since then I've paid them off. I think I only have like a 5% utilization at this point, but those inquiries I feel like are hurting me the most. So yeah, I think that's probably where I'm stuck. But would you still advise starting with you guys if you do have that many inquiries, or do you want to wait till that gets down to below a certain number?
Yeah, I wouldn't move forward with if it's going to with a heavy amount of inquiries on the report. We would want to look at it and find out because if it's like a home loan, then that's not going to affect the credit card.
Yeah,
If it's an auto loan, that's not going to affect the credit card. There's a whole variety of different loans that are not going to affect a personal or a business credit card application. What the business credit card lenders are looking for is other forms of unsecured credit that you were recently granted. So if you
yeah,
were granted a home loan is a self-fulfilling prophecy. It's got a lien on the property. So
yeah,
they'll
yeah,
take the asset. They're not the credit card lenders aren't worried about that. If you got a car loan, again, it's asset based. So what the credit card lenders are looking at when it comes to those inquiries is what inquiries are on there from other unsecured products like ours. Could I give Eric a loan and then it turns out that over the next 30 days other loans appear that he had just gotten approved for in the last month.
yeah.
And that's what the credit card lenders are looking for.
Okay, got it. Yeah, thanks. Are there anything that you can't use business credit cards for in like certain industries, like e-commerce or trucking, or is there anything that you can't use those for, or that you shouldn't?
E-commerce and trucking are excellent industries for business credit cards, including real estate. Now, one of the things that you can't use it for, but there's workarounds, is the medical marijuana industry.
Okay.
So in those instances, you would want to set up like a management company, and then once you get funding, your management company would loan money to your medical marijuana company, or you're doing it in two steps. You're getting funded through a company that's fundable and
Yep.
isn't going against any industry issues. And then you do your own loan, a note loan between entity A and entity B. And then that's, so there's always workarounds, but when it comes to certain industries, the marijuana industry, for example, is one of the ones that we wouldn't directly be applying for.
Got it.
When somebody
Got it.
the utilization side of it, when you're getting because you guys do 3 rounds of funding, correct? Like so you do like today, 6 months from now, 12 months from now. Yeah, but you got to be able to get that next round of funding, you do need to keep your utilization at a certain percentage to be able to move on to the next one.
So you do need to keep the business utilization somewhat under control. You don't want them all to be maxed out when you go for that next batch, but they also don't need to be paid down below the 35%. The 35% utilization is for personal cards.
Okay.
But once we've got your first batch of funding, if you have made significant pay downs in it, that will help us with the second batch.
Gotcha.
Got it.
Nice. When somebody when they first sign up, I guess, what do they, what's the process that somebody goes through? I mean, you meet with somebody in your office, they go through your credit report and then just kind of from there, just decide if they're ready to go, or And then I guess and then like more of the question would be maybe like throughout the process, like how many times, like are you checking in every once in a while with these people, or is there continued conversations going on, or how's that communication work throughout the process throughout that 12-month term?
So when a client gets started, the first thing that they're going to do is they're going to log into their portal and they're going to fill out all the information that we need so that we can move forward and actually get them the funding. And so once they've filled out all of their information, our team is going to take a look at their credit and it's going to contact them and let them know exactly where they're going. Like if they're going directly into applications, then they're told you're going into applications. If they need to do some inquiry removal, or depending on what they need is they're going to receive an email telling them you're going this direction or that direction. And so the only directions are prepare for funding or applications. So in preparing for funding, there could be different things that we have to do to get the client ready. But once the client is ready for funding and we've started the applications process, then it goes into negotiations and the client gets their funding. And then after that, it's just a waiting game. They just wait a month or two, and then they're doing another funding batch. And then again, doing the third funding batch. In some cases, we can do even more than 3 funding batches if a client is working together with us very closely and moving forward quickly.
Yeah.
So,
is it better if a client, let's say, when they sign up, does the clock start right when you sign up for that, when you pay that money to start? Does the clock start right then, or does it start when they go through their first round? So would it be better for them to kind of like get situated first before they pay, or can they pay and then get situated and then the clock starts?
So the clock starts once they get started, once they get signed up with us. However, if the client's not ready to move forward yet, then they can tell us. So a client can sign up and then tell us, hey, I'm not ready to move forward yet. Can you put my file on hold? And so their file could be on hold for a month or for 2 months while they've while they're doing whatever it is that they're doing that they want us to wait for. So we do have that pop up from time to time where clients, they put their file on hold. And so if we're not working, then we're not going to have your time running. But if you get started and our team is immediately jumping on your profile and we're immediately starting to push you into funding. And so, the time starts, when we start doing our work, which is from the time you start up. Or you sign up.
Okay. Yeah. Got it.
What is the cost of the program? And are there any special options for anybody who's watching this today with us?
So the cost of the program is $4,000.
Okay.
And you guys, as an affiliate, have actually secured a $500 discount for all of your clients. So all of your clients getting started today on this call are only need to pay $3,500, and there's payment plans available. So there's this $500 discount that we've made possible through our affiliate program. And for our affiliates, we want to incentivize their clients to come through their link.
Sure.
We don't want them to come to our website. You come to our website, you have to pay $500 more.
Gotcha.
Go to your website, you get $500 off. And so
what kind of payments can they split into? What are the options with that?
We have a 5-pay and a 3-pay and a 2-pay.
Okay.
So awesome. And that comes with 2 applicants, correct? Per the 3,500, you get two people that can run credit on that.
2 applicants, 2 people's credit, and we can even work together to find who those 2 people would be. Let's say that you start with 2 partners, and it turns out that your business partner's credit isn't so good, so you decide to use your wife's instead. And we'll work with you to find who those 2 partners are.
Okay. Do you have an option where they don't pay the 3,500 and they only want to have one person, and that person maybe can't find anybody else? Do you have something where you can just pay like 2,000 instead of 4,000 and just get one person on it, or do you have that ability, or no?
No, but what we do have is a pay-as-you-go model.
Yeah.
So a client could get started on their own and just pay 8% as they go along. So once we move forward on the first batch, if we get them $100,000, then they pay us $8,000, and just pay 8% of the funding that we get them. And then they would, once we've done that batch, they would just tell us if they want us to do another batch. And then in this particular model, they just pay as they go. And we do the work first. Once we've created the credit, we invoice them, and then they pay the invoice.
Okay, so there's two different models. There's one where they pay up front and it's nothing on the back end. And then if they want to just pay as they go, you guys do an 8% pay on the back end.
That's correct.
I was just gonna verify that. So if they do the traditional, just the $4,000 or $3,500 model, then you guys do everything up front. There is no split on any of the credit on the back end. It's just the front end, and you guys white glove everything, but no split on the lending they get.
That's right. And more importantly, that $3,500 covers them for many batches, for a minimum of 3 batches. So imagine that you sign up with us and you spend $3,500 and you get access to 3 application batches. That's netting you hundreds of thousands of dollars. Or you could apply and do the pay-as-you-go model. Let's say you get $100,000 on your first batch. Now you owe $8,000. And you don't have no membership. $8,000 just for that one batch.
Right.
Yeah.
Now, if you want another batch, you're paying the 8% of that batch as well.
Yeah.
So, and there are some clients that say, hey, I would never pay up front. But if you charge me 8% on the back end, absolutely, I'll do that. And most of these other funding companies, they won't even advertise. They won't even put on their website how much they're charging on the back end, because a lot of them are charging 16% on the back end.
Crazy. Or
10%. So us at 8% is, we don't know of any other business funding company like ours that's reputable, that's actually doing it at 8%. None of them put it on their website. It's always, you have to call us, and then they give you your special number.
Yeah.
Yeah.
That's awesome. I mean, I love everything we hear. I mean, we've had great success with all of our clients going through you. I mean, it's always been a good experience, and I mean, everything it's been great. I mean, we're hoping to be able to share this with more people and continue to grow in the new year and do some awesome things. And I think have a good call with Amanda too, because I've got a few things to talk to her about. From the equipment financing to our like the 2-level, and getting us that, and then also the page on the lending side of it, like showing all the lending options that are out there on top of the 0% credit side of it too. So didn't even know that was even an option prior to this. So
awesome. That's something that just came online earlier this year, and not all of our affiliates are using it yet. So.
Okay. Well, we're excited to use it and to get it going, because we have plenty of people that have contacted us over the last few years, and but we love working with you guys. You guys are amazing. We really do appreciate you coming on with us today and taking the time to go over this.
Thank you. And I appreciate you guys, and we are thankful for your referrals, and we'll always diligently work to get them as much funding as possible.
Awesome. And then us two are going to be some of our next, just that we actually reached out earlier today, and we're both going to be doing our soft pull here probably like today or tomorrow, and get us start going through the process ourselves, so we can show that process on our channel too as we move along, and show what kind of funding we're getting, all that too. So that'd be awesome.
Awesome. I'm doing that as well. I just did another batch of funding, and I've had 115,000 come in so far. And I'm going to be doing a video here with Zach where I'm going to be unboxing it, open up all the envelopes, and showing. It's going to be a lot of fun.
Yeah.
Yeah. Heck yeah.